this halving chart is, you can see the discipline here, as Yassine said. It's been mathematically metered, and actually, we did a Bitcoin brainstorm with miners, and I think Yassine's going to tee that up in a minute. But this monetary policy basically was written in 5 lines of code. I did not know that until we did that Bitcoin brainstorm. It is so elegant, so simple, so straightforward. So in contrast, take a look at this. All right, this is M2's M2 growth, and it's a 4-year annualized percent change. So from March this month to March, or this past March to March 4 years ago, what is the monetary growth rate at an annual rate? That would be the last data point here, which is, you can see the black dash line. So that rate is about 8%. And actually, probably it's closer to 6%. There's a lot of data on this chart. But take a look at the 4-year growth rate of M2. And you can see it's all over the place. You can see in the 60s and 70s, it moved toward double digits, and we ended up with double-digit inflation in the late 70s, early 80s. It took a while to get there, and it seemed to be very sticky. And then after Chairman Volcker came onto the scene, I think that was 1979, he said, we have to get this thing under control. And he started choking money supply. And that momentum actually continued into the mid-90s. And then in the mid-90s, it was very interesting because it's somewhat similar to today. In the mid-90s, there was a domino effect of currency devaluations around the world. Our monetary policy was propagating throughout the world because it is the world's reserve asset. And the first devaluation actually was Mexico. And it was a big one. I remember it very clearly because we were involved with Mexican stocks. And then a few years later, we had the Asian domino effect. I think the Thai baht devalued in 1997. And then the rest of Asia's currencies devalued. We had the Russian default in 1998, and then we had long-term capital falling apart. Monetary policy propagates through the system, and when it's so unpredictable, it leads to all kinds of excesses. And so what do we have now, where we see what happened because of COVID? That drove the 4-year annualized growth in M2 up to 12%. And then now we've had a very sharp deceleration, unlike the 70s, 60s and 70s, where there was sort of an acceleration, at least in the sense of a trend, and a stabilization near double digits. Here we had money thrown at the system to prevent an outright depression. And if by the end of the year we stabilize around 0% year-over-year growth, that's year-over-year, this line will drop toward 2 to 3%, which, as you can see, we've only seen once. It was in the 90s, and after that, all hell broke loose around the world. It is interesting to note that the devaluations, there are many devaluations taking place in the rest of the world today. I've mentioned in the past Egypt, I think, devalued by 40% in February or March. The Nigerian naira is down 50 to 60% in the last 9 months. We're seeing the Indonesian rupiah devaluing at an accelerated rate. And in Latin America, of course, Argentina basically recognized that the black market had it right, that its currency, at least publicly stated, was about 50% of that rate in the black market, and that was correct. So we're in a very interesting environment, and it's caused by monetary instability around the world. And so I often talk to Yassine about these devaluations. And of course, in emerging markets, anyone with a connection to the internet now pretty much can establish or buy an insurance policy in the form of Bitcoin, which, just flipping back to the halving in this purple line, doesn't look anything like the volatility you see in monetary policy here in the United States and around the world. And of course, it's controlled by human beings. When we went off the gold exchange standard and closed the gold window in the United States in 1971, monetary policy just became unhinged, and it has been unhinged ever since, although human beings have tried to contain the inflationary ramifications, and they take it too far both ways. And right now, we think they're taking it too far on the downside. And I'll get into that as we go through some of the rest of the monetary indicators and the economic and market indicators. Yeah, and I think Bitcoin Monthly helps me understand the health of the system. I mean, the transparency of the network has given us a great opportunity to understand what's going on out there, and Yassine and his team are able to gauge where we are in the bull market based on some of the indicators and how they've behaved in the past. And before handing it back to you again, Yassine, I wanted to highlight one point. It is amazing to me that Chairman Powell and the Fed governors, as you mentioned, there are no Fed governors here in the Bitcoin ecosystem, but there are in the United States. And every time one of them speaks, markets move. And you know what? As I said, they overdo it one way, then they overdo it the other way. And it's just contributing to a lot of instability, not only in the markets, but also in the economy, I would submit.
Thank you for joining us today on this insightful journey into the world of crypto and investing. If you found value in today's discussion and want to stay updated on future crypto news and market insights, don't forget to hit subscribe button below and click the notification bell. By subscribing, you'll be part of our growing community, gaining exclusive access to timely analyses and strategies. I look forward to having you with us in the next video.